Welcome back to Finyugen. In our last video, we have mastered a technique on making short-term profits through stocks. In this video, we will learn a technique to make money through stock in the medium term. I'm your host, Sujata. When we say medium term, the holding period is quite longer. It is 3 to 5 years. Similar to our last lesson, here also we are going to buy the leader, but the idea is slightly different. In this case, we are going to scan the stocks using fundamental analysis as our holding period is quite longer. The key to passive investing is to buy the stock based on its earnings growth. The growth must be consistent in last few years, and also it should have outperformed its peers in all other fundamental indicators. To understand it better, let us take up with an example. Let us go back to the year 2014, when the consumer confidence started to improve, the effect of which is clearly seen in automobile as it starts to post higher sales. Once you pick up the sector, we have to find which stock posts consistent sales growth in last 3 years. Let us check this out. From the above chart, it is evident that HR Motors has grown consistently in past 3 years and emerged as a leader in the sector. The sales growth alone cannot help us to decide the stock, as the company might have increased the growth by decreasing the price. In other words, we will have to check if the company has the pricing power. First step is to check the profitability metric by comparing the EPS growth of the companies in the last 3 years. It is clear that HR Motors has emerged as the leader in recording the EPS growth in the selected period. Now we have to check if Mr. Market offers right kind of valuation to buy the stock. We are confining to the two-wheeler industry as HR sells motorcycles. It is not appropriate to compare it with other automobile companies such as Maruti, which sells cars. We have presented the valuation metrics such as price earnings ratio, market cap to sales ratio, and EV by EBITDA in the following table. It is evident that HR Motors is valued at significantly higher multiples than rest of the group. It's pricey because of the leadership position, and so the investor confidence is reflected in the price. Sometimes the leaders command better multiples, and we are accepting it as it has been posting a sales growth of nearly 60%. Besides, the premium is not heavy. Let us go to the next level of checking by using some more fundamental metrics like operating margin, profit margin, debt equity ratio, return on equity, and return on assets. First, we will start analyzing the profitability metrics, operating margin and profit margin by comparing the data of the companies for last 3 years. In both the charts, you could see that HR Motors is faring much better than others. This is a positive sign for the stock. The company may improve the margin by using debts. Hence, it is necessary to compare the debt-equity ratio with those of its peers. Here is the chart. HR Motors piped its peers and came out on the top even in debt-equity ratio. In the first 2 years, it had negligible debt while it retired all its debts recently and became a zero-debt company, which is a rare feat in the automobile industry. Finally, we will check the ability of the company to generate return from its available capital base with return on capital employed and return on net worth. Once again, HR Motors has an uncanny ability to emerge as a leader in this test too. Hence, we could have selected HR Motors in the year 2014 for medium-term investing, as it has emerged as a winner in all the fundamental parameters. Yes, its valuation metrics may be a bit worry, but a leader of any sector would always command better valuations. And hence, we are going ahead with the selection. Assuming that you have bought the stock at the end of January 2014 when it was trading around Rs 5,000. Let us check how it fared in the next few years. Had you invested and waited patiently for 3 years, it would have given you a massive return of 360%. The same investment would have fetched you a return of 500% in 5 years. In other words, had you logged rupees 10 lakh in HR in 2014, it would have become rupees 60 lakhs in the year 2018. That's the secret of passive investing. We have come to the end of the show. Today, we have successfully mastered a technique to invest in stock for medium term. We will continue to present some more techniques in our upcoming videos. The next video is about how to make money in long term. Stay tuned for more videos. I'm sure you would have liked this video. To come up with more videos like this, please do like, comment and share this video with your friends. Subscribe to our channel for more updates. Also, visit our blog at finyugen.com to find many interesting articles.